Good morning, Bitcoin. Today is Tuesday, April 10th, 2018. My name is Thomas Hunt, and here's what's happening today in Bitcoin. The price of Bitcoin was up 0.63% in the last 24 hours, with a last of 6,821, a high of 6,859, and a low of 6,660. That's $1 for 14,676 Satoshis. The current Mayer multiple is 0.71, with a Bitcoin price of around $6,700 and a 200-day moving average of around 9,500. The Mayer multiple has historically been higher 91% of the time, with an average of 1.57. Bitfinex denies fraud allegations tied to confiscated funds in Poland. On April 7th, Cointelegraph reported on a controversy surrounding Bitfinex after Polish prosecutors allegedly seized $400 million from 200 accounts at a little-known Polish bank, one of them which was allegedly linked to Bitfinex. In the Polish media, they worried that the confiscated funds were involved in an international fraud and money laundering scheme. However, an administrator on the Bitfinex subreddit spoke out against the claim on April 8th, saying, "This is not true, and Bitfinex is not affected by whatever has happened. We'll be releasing an official statement later today." It may be even worse, as the Polish media is reporting that Bitfinex is mixed up with Colombian cocaine. Very interesting reason why they raided the Polish account. Complex. Story developing. Still unconfirmed. Bitcoin. The harder they fall, the higher they rise. 35,000 by Q4. The cryptocurrency market has fallen under intense pressure during Q1 of 2018, with Bitcoin down more than 50% from the start of the year. Many altcoins have also seen their fair share of declines, with the biggest losers correcting upwards from 90% of all-time highs. But it looks better for Q2, which is often met with more optimism and bullish sentiment compared to Q1. Nations such as China seem to be moving in the right direction when it comes to regulation. Not calling it a crackdown anymore, as you can see. China has stated that it will soon move in and begin to regulate cryptocurrency, as opposed to an outright ban of the digital assets. Moreover, China now has a new blockchain fund with $1.6 billion, something which we have not seen before, because 30% of the fund is backed by the Hangzhou city government. Interesting stuff. Bitcoin's soaring value was down to infected buyers, economists say. Analysts at Barclays said the soaring value of the new digital currency last year, when prices rose by more than 900%, was helped by new buyers being infected by the euphoria surrounding Bitcoin. As the article says, the Barclays model divides the pool of potential Bitcoin investors into three groups: susceptible, infected, and immune. It assumes that as prices rise, infections spread by word of mouth — nobody likes missing out when their friends and colleagues are getting rich — or FOMO. So Bitcoin's a meme? You guys have just discovered memes now? Yeah, you go, oh, using studies from the world of epidemiology, the branch of medicine concerned with the occurrence, distribution, and control of epidemic diseases. Oh, you mean memes? You mean an idea, behavior, or style that spreads from person to person within a culture, often with the aim of conveying a particular phenomenon, theme, or meaning represented by the meme. A meme unit acts as a unit for carrying cultural ideas, symbols, or practices that can be transmitted from one mind to another through writing, speech, gestures, rituals, or other imitable phenomenon with a mimicked theme. Supporters of the concept regard memes as a cultural analog to genes, in that they self-replicate, mutate, and respond to selective pressures. Nice work, mainstream media. Maybe you'll be talking about genes next time. Infected. Bitcoin behaves like the flu. What are you talking about? Just like when the Apple stock came out or Facebook stock, Facebook buyers were infected by Facebook stock. They believe that it'll go up and they got infected. This is just ridiculous. This is in The Guardian. This is in Bloomberg. This is high level FUD right here. Don't get infected by Bitcoin. It's just ridiculous. Bitcoin would be a calamity, not an economy. MIT Technology Review takes a serious look at the future of the world if Bitcoin became the only currency. As they say, the simple answer is not well. Our economies and financial systems are built around fiat money, and they rely on the central bank's control of the currency and the government's ability to issue debt in that currency to help them manage the business cycle, fight unemployment, and deal with financial crises. An economy in which Bitcoin was the dominant currency would be a more volatile and harsher economy, i.e., like the real world, in which the governments would have limited tools to fight recessions and where financial panics, once started, would be hard to stop. Now, all of that's generally true. I'm going to completely agree with them. I'm also going to say that the governments wouldn't have the money to buy weapons to start war, to use the weapons so that they could buy more weapons to start more wars. It would be a different world. And the sad answer that MIT is not seeing here is that it's going to be a different world. When the MP3 came out, everyone said, oh, it's so terrible. Musicians are going to have to perform concerts and sell merch to make money. And now musicians have to perform concerts and sell merch to make money. The MP3 doesn't care. The technology is agnostic. It doesn't care that it's changing the world left behind and it's creating a new world in front of it. The technology is not going away. As they say, we've opened Pandora's box. Originally, it was actually a jar. We've opened Pandora's jar, and there's no way to put this stuff back inside. The idea is out there. Whether it's Bitcoin or some other cryptocurrency, there will be a major cryptocurrency in the future. And as MIT says, the interventionist Keynesian economy, the economy where the government does have money, the government can print money, is going away. It doesn't matter. Like, it's great to say it would be not well and it would be bad and it would be different, but this is all window dressing on the Titanic. The ship is sinking. The Bitcoin is here. It's not going away. So you have to decide. It's not more about lamenting the loss of the past. I would say it needs to be more about being flexible going forward into the future. You need to understand Bitcoin is going to change everything. It doesn't matter if you like it or not. It doesn't care about your business model, your entrenched interests, or how long you've been doing business in the banking sector. Just like the MP3, just like file sharing, it's coming. It's unstoppable, and it is going to change things. It doesn't matter if you want it or not. Twitter briefly shut down at Bitcoin, sparking wild conspiracy theories, like the conspiracy that Twitter actually gives about their namespace, that Twitter actually cares about brand accounts like at Bitcoin or at Linux, the same way they do about at Microsoft. Do you think this would happen with at Microsoft? Anyway, it seems like the original owner has restored access to the Bitcoin account. As he says, he learned that the account had been suspended. A new account using the same username began posting nonsense. Community and media outrage. Not sure about that one. I think people were pretty happy about it. I saw one poll that said 89% of the people believe that Twitter did the right thing in taking this account away from the fake people who have it now. And as even Bloomberg Crypto verified right there at the top at crypto, the Bitcoin account is back from suspension and has resumed tweeting against Bitcoin. That's right. The at Bitcoin account tweets against Bitcoin. And here we have an example. Alice wants to send money to Bob. Bob doesn't have any channel open. Alice can't send funds to Bob, which is absolutely ridiculous. As Ben B says, this is like saying that Alice needs to pay cash, but has no cash in her pocket. Now she can't pay Bob. It's just ridiculous. And as Crecchino, who I met in Paris, says, Alice wants to send Bcash to Bob. Bob doesn't have any Bcash wallet or addresses. Alice can't send Bcash to Bob. What's your point? And he really does nail it right there. And then they come back with the old tipper bot, and someone says, "Oh, you have a wallet now." And they say, "No, that's an IOU for BCH. You didn't actually send him BCH." And this guy doesn't get it. He says, "I didn't. The tipper bot did." He says, "No, the tipper bot didn't send him BCH on your trigger. It sent him an IOU for BCH." And a lot of people have confused this with these tipping bots in the past, saying how revolutionary they were. And really, they're just yet another centralized database. They are not special or unique. They're not actually sending the currency because of the fees or because of whatever reason. They're trying to get around micropayments, basically. They can't do micropayments unless they have a centralized database and a later form of settlement. And we all know what that's called now. That's and not with a centralized database, but that's the Lightning Network. That's layer 2 technologies. You'd have to go to Bitcoin for that. You're not going to find that on Bitch. And I just wanted to reiterate what Doug Polk said yesterday on Twitter. This is a great tweet. He said, "This is like saying if Pepsi owned Coca-Cola's Twitter and was constantly tweeting about how bad Coke is. Deleting the account would be anti-free speech. Entities deserve to be able to represent themselves, not have other people pretend to represent them." I'm going to go out on a limb and say this at Bitcoin Twitter thing, it's not over. Not by a long shot. Rangebound. Bitcoin bulls need a break above 7,500. And let's go down to the view. Monday's bearish outside weak candle does suggest scope for a bearish breakdown. A downside break of the narrowing price range triangle pattern would open the doors to a 6,000 to 5,950 falling wedge support. That said, traders need to watch out for signs of a rebound from the April 1st low of 6,425. An upside breakout of the triangle pattern could see Bitcoin chew through supply around 7,200, confirming a falling wedge reversal, a bearish pattern, and allowing a rally to $7,500, the double bottom neckline. Only a close above that level would confirm the short-term bullish trend reversal. People trust Satoshi Nakamoto more than the Federal Reserve. That's interesting. That's interesting. The International Exchange Incorporated, owner and operator of the NYSE, is keeping an eye on the nascent cryptocurrency trading markets. "There's a trend here we can't ignore in my mind, so I don't discount it," Sprecher said. "People put more faith in a guy named Satoshi Nakamoto that no one has ever met than they do in the US Fed." Huh. I wonder why that would be. I wonder if it's because the Fed creates money in a strange and complex process that they never explain to anyone, and that people don't even know that we're off the gold standard. People don't know anything about the Fed. At least Satoshi Nakamoto had the decency to write a white paper and open source his project for everyone to use. Bitcoin Day proves crypto is thriving in Argentina. Bitcoin may not have yet conquered Argentina, but it's certainly making inroads. There were 500 attendees at Bitcoin Day in Buenos Aires, and they contrasted the situation in Argentina, where they are supporting Bitcoin, versus Chile, where they have decided by all commercial banks decided to close the accounts of all cryptocurrency companies at the same time. They killed the industry. Situation developing, but we'll have to see how it goes with Argentina versus Chile. Who will turn out best in the future? I'm betting Argentina. Manufacturer holds crypto night ASIC fire sale after Monero hard forks. Once again, an impressive move by Monero to hard fork, changing their product to not work with the new ASICs. As you know, Crypto Night, Bitmain, and Baikal, I don't know, Baikal? Bitmain and Baikal are now sitting on piles of now nearly worthless devices. And while Bitmain can likely stomach the losses due to its reported $4 billion in profits last year, Baikal may have bitten off more than it can chew. To wit, the Hong Kong-based firm is now offering a 5-for-1 deal on its Crypto Night ASICs in a bid to recoup something, anything, from the funds it poured into researching, development, and manufacturing for the useless product. Buy one, get five. And of course, the conspiracy continues as some bullshit projects named Monero Classic is now being promoted by Bitmain's official Twitter account. If you can't see what's going on, Bitmain is creating their own versions of every popular cryptocurrency that can only be mined by their miners. This is mining attempting to take over cryptocurrency. It failed on Bitcoin, it failed on Monero. We'll have to see how it does everywhere else. I troll with a very important announcement. For anyone that has used JavaScript, websites such as Bitaddress, where you downloaded the JavaScript, probably fall in here to generate paper wallets. They are not safe. And there's more details here, but there's multiple vulnerabilities in secure random. This is a library that JavaScript uses to create random numbers, and it's apparently not that random. So part of what you would do to create a secure paper wallet, and according to my instructions that are now outdate and probably unsafe, you would download the bit address JavaScript to a CD or to a flash drive, something like that. You would boot into Tails Linux. Tails is a special version of Linux that doesn't track anything about the user. Every time you reboot your computer, you get a brand new computer. It erases everything you do. It's pretty cool software. So you would use Tails, then you would load this JavaScript, then you'd create your Bitcoin addresses offline. This was presumed to be a safe way of doing it. But as we can say now, there's a problem with secure random. This means that if you have Bitcoin paper wallets that you've printed out in the past, you should probably transfer all of your coins and additionally, if it's possible, all of your hard fork coins off of there. Basically, someone could now, I mean, it's complex and there's math and things, but let's just imagine somewhere out there can now figure out what your keys are and is probably creating a huge database of all these keys, which they're then going to drain all the accounts for all those keys. We don't know that that's happening, and this is a security researcher who's releasing it here, and hopefully it'll be fixed and patched, but that doesn't do anything for your wallet. If you created your wallet with a JavaScript program, it's probably time to get a Trezor or a Ledger, or I don't even know how you would create wallets without this randomizing program. So hopefully they'll fix the randomizing program. Then maybe you could create new paper wallets. This would also go for, I've seen a lot of people in our World Crypto chat. They're talking about, putting metal wallets, crypto steel, punching keys into aluminum, going back to the basics, trying to make wallets that'll last a really long time. And the problem is, while that the wallet key may be safe and you're doing everything you can, printing it on metal and putting it in your safe deposit box, if the random numbers that you use to generate your wallet are not random, it's not safe anymore. So this is a major announcement. Probably mention it tomorrow as well. And we've got some great news. Card terminal makers have unveiled their official new designs for 2018. And those of you at home might be wondering why this is happening. But there's been an interesting thing in the American switch over to chip cards. Basically, they forced all these companies to switch to chip. If you were on the swipe system, they used to protect you with insurance. But what they said now is that the swipe system is insecure. You have to upgrade all of your machines to the chip system. And the only way to get insurance for these small businesses is to use the chips. Of course, they have to then upgrade all their hardware and their software. What's funny is a lot of these machines already have included the chips for years because they're using them in Europe and everywhere else. So people that refuse to upgrade to the new chip system have to put these little signs on their card readers saying that they can't use the chip. It's also become really confusing. You used to have one way to pay, you just swiped and go. Now they're changing it to two ways to pay, and that doesn't work, and you go back to the swiping. Also, personal pet peeve, it drives me crazy. The interface designers on this, they put the words remove card on the screen. So it says, do not remove card. So if all you do is read the words remove card, it's just bad interface design. It needs to say waiting or scanning or please wait. It shouldn't say please wait to remove card. It's ridiculous. I've seen a couple change. They also make that horrible sound. It's unbelievable that someone thought that would be a good idea to fill supermarkets with the sound of It's become a real mess, at least in the US, what they've done with credit cards. And there's also a pretty major story that they're not going to require signatures on credit card purchases anymore because the signatures have become totally worthless, with many people drawing penises or small dogs on their signatures. Alex Bosworth weighs in on the Lightning Doubters, saying, "It's interesting to read the Lightning Doubters. They're right about the challenges existing, but they're wrong that there won't be solutions. There are doubters who say it can't work, people trying to keep things the same, and then there are doers who are very busy proving them wrong by creating change." Excellent tweet. And Nick Carter weighed in saying that the blockstream core myth is pervasive on social media, academic discussions of Bitcoin governance, and in the media. A 10-minute look at GitHub eviscerates it. That's right. There are lots of different people contributing to Bitcoin, not just Blockstream. It's a ridiculous idea. And shout out to my friend DJ Booth, whose bot Bitcoin EDU has been collecting and tweeting Bitcoin related images since January 2014. There's more than 1,700 images saved on his server, but here are a few highlights. Magic Internet Money, a Bitcoin race car. There's a nice Bitcoin car. And finally, he also mentions how Butterfly Labs screwed him back in the day and he didn't become a miner. He also says that Bitcoin Magazine was an actual printed magazine co-founded by Vitalik Buterin. Oh, looks like he bought 2 copies, one to read and one to keep. Oh, planning ahead. Also, it's great to see this. The rise and fall of Bitcoinica, an exchange that no one even knows about anymore. And they put it on there as the Titanic. Beautiful. And it's just funny to see these headlines and see how things have changed. I don't think I've ever seen this one with a shark on it before. It's pretty cool. And it wasn't long ago when Bitcoiners used to lose their shit seeing Bitcoin on TV or in public. Now it's everywhere. Even his local radio station has a competition called Hitcoin as a play on words. We've made it into the mainstream. And my highlight here is one of my Twitter friends put this out, and it's T-shirts at his local mall. And you know how they normally have the T-shirt stand, and I guess it's not loading today, but you can see the T-shirts there. It says crypto shirts, and they're all Bitcoin, Litecoin shirts. They're none of them are, punk rock or bands or anything like that. It's all Bitcoin, the entire shop. What if I told you no one knows what the price of Bitcoin will be tomorrow? Surprisingly true, don't you think? And as Armin van Bitcoin says, Bitcoin is now in its 10th year of being constantly undermined by banks and governments all over the world. The fear portrayed by the corrupt couldn't be more evident. Big trees fall hard. And that's about it for this episode of Today in Bitcoin. Be sure to give us a thumbs up down below. Subscribe if you haven't already. And if you've got some extra Bitcoin, donate Bitcoin to support the show. Click on the QR code right here. We haven't had a donation since April 7th when we were donated 0.00140595. Thank you for your support. And you can also support the Mad Bitcoins Patreon account. We're up to $430 a month. Thank you for your support. Check out the World Crypto Network at YouTube.com/World Crypto Network. You can subscribe right here. And if you click this bell, you'll get notified whenever we do a new video. Major key right here. Click the bell. Get notified. You can also follow us on Twitter at World Crypto Network or at Mad Bitcoins. And check out the World Crypto Network podcast. You can subscribe to get audio-only versions of all of our shows, including more shows from other YouTube channels such as Tone Vase, Jimmy Song, and Adam Meister, as well as the Noted podcast. Check it out on iTunes, World Crypto Network. And shout out to this cool video this guy made. He's a suit guy. He's into suits. And he made a video where he said, should you invest $1,000 in Bitcoin or a new suit? And it's funny because he went through all the logical arguments, and it'll crack you up because he's like, I would buy the suit. I'd buy the suit. You'll look better. You look nicer. Women say things to you. People call you sir. He's very much into buying a suit, making it look smarter. But it's funny at the end, he says, I don't know about Bitcoin. So I'm going to put the $1,000 in Bitcoin. Sadly, it was about 3 months ago. So he's buying the top. So in this case, it would probably been better to buy the suit. And the Feynman technique of learning bonus content. Step 1, pick and study a topic. Step 2, explain the topic to someone, like a child who's unfamiliar with the topic. Step 3, identify any gaps in your understanding. Step 4, review and simplify. Important words from Richard Feynman. And Swift on Security asks, what if IQ is just your processor waiting in the simulation's AI system? Something to think about. Until next time, thanks so much for watching. Bye bye.